Welcome back. Well, for the markets, like we've been pointing out, it's just quiet at this point. So we have the advance decline ratio, which is just about 1:1, completely even keel. A couple of stocks which are moving is obviously a couple of these financials. So Bajaj Finance is up around 1.5%, but a few of the auto stocks are not doing too badly. So Bajaj Auto is up around 0.6% and Hero Moto is up around 1% as well. But let's talk about the commodity space and what's taking place there. Manisha joins in to tell us more. Manisha.
Well, thank you so much for that, Ekta. And joining us on the show also is Sandeep Bajoria from Sunvin Group. Mr. Bajoria, hi, thank you for joining in. And we were reading the latest reports which do tell us that for the month of June, the palm oil imports into the country are nearly 60% higher on a month-on-month basis. How would you look at the overall number? And is it because it's at a discounted rate? Also, as we start into July, move on to August, it's the festival season as well, which is waiting.
Yes, Manisha, you're absolutely right. I'll just give you a background. In January, February, March, April, all the 4 months we imported overall only 9 lakh tons of all the oils put together, 9 lakh tons per month. And out of that 9 lakh, the palm was between 3.5 to 4 lakh tons. So Jan to April, 9 lakh tons overall, all the oils put together, and palm was only 3.5 to 4 lakhs. May, we got total 12.5 lakh tons. And June, we got 14.5 lakh tons imports. And in May, the palm imports were something around 7 lakh tons. And June, the imports are about 8.5 lakh tons. So palm has increased from 3.5 lakh tons to 8.5 lakh tons. Overall import has increased from 9 lakh tons to 14.5 lakh tons in June. These are the main factor is palm oil became very cheap because the season in the palm oil started in Malaysia and Indonesia from June onwards, and that's the reason May, June onwards. That's the reason more supply was available. And the palm, which was costliest oil in January, February, March, which was trading higher than sunflower oil and soybean oil, it came down drastically. And today, I can tell you, the crude palm oil is quoted in India at $1,055 per metric ton for July shipment. Soybean oil is $1,170. Sunflower oil is $1,190. So palm is cheaper by $100 to soybean oil and $140 to sunflower oil. That's why the palm imports have increased. And coming months also, in July, August, September, October, all these 4 coming months, which is main festival season, where we require more edible oil, because domestic oils are now getting exhausted and low stocks are there. Your rapeseed oil is also very high right now in India. Groundnut oil, cotton oil, all these 3 domestic oils are at higher level. Imported oil are much cheaper. So imports will increase, and palm oil import in July, August, September, October will be also something around 8.5 lakh tons per month. And overall import per month, I believe 14.5 lakhs to 15.5 lakh tons per month will come. So we are matching the need, we are matching the requirement. Supply is matching the need in India, or matching the need of the festival season also. So I think overall we are quite balanced. Neither we are importing less nor we are importing more. This is the right way we are managing our supply chain as a nation.
Sure. Mr. Bajoria, also, what's your sense on the per capita consumption now? Because a lot of conversation has been around that as well. In 2010-11, it was 8 to 9 kgs per person. Now it's at 23 to 24, and conversations about lowering it.
Yes, Manisha, you are absolutely right. Per capita consumption, if you say, you rightly said, about 15 years back. So India, if you see the Indian economy, which was at that time roughly about 1.5 trillion, 1 trillion, 1.5 trillion. Now it has become 4 trillion economy. So same way the per capita consumption was 8 kgs, 9 kgs has become 18.5 kgs per person per year. On a population of 1.46 billion, what we require is 265 lakh tons of vegetable oil per year in the country at 18 kgs per person per year. And out of 265 lakh tons, which is demand, our domestic production is maximizing only at 100 lakh tons. And 165 lakh tons we have to import. And in 165 lakh tons, Manisha ji, India is a pretty price sensitive country. So whichever oil prices are competitive, prices are lower, we see the higher import of that oil. So palm oil, when the prices were higher, the palm oil import annual was only 75 lakh tons. Now when the prices are lower, palm oil import on an annual basis can go up to 90 lakh tons. Soybean oil import is hovering around 34 lakh tons to 44 lakh tons, depending on the price. and sunflower import is between 30 lakh tons to 35 lakh tons. So this is how our composition is, which is there of three oils. These are the major three oils which India is importing. And very happy that in the world we have this kind of availability from where we can get soybean oil from Argentina, Brazil, and sunflower oil from Russia, Ukraine, Argentina, Romania, Bulgaria, palm oil from Indonesia, Malaysia, Thailand, Papua New Guinea. These are our main trading partners from, they have surpluses from which we are getting these oils. Although recently US has increased the biodiesel mandate very big way, Brazil has increased B14 to B15, the 15% biodiesel admixture into diesel. So that is absorbing more soybean oil in their own system. But still Argentina is our friend. Argentina has great, whatever surplus Argentina has of soybean oil, India buys 50% of that surplus.
Sure.
So our main trading partner in soybean oil is Argentina.
Argentina as of now.
Okay, all right. The key word being trading partners. That's the buzzword. But thanks very much, Manisha, for joining in and taking us through that conversation. We need to take a short break, but up next, we'll get chatting with the management of Moltech Packaging on demand trends. Stay tuned.